Tutorial 1, continuation of accounting cycle topic. Now, our lesson number 8 is on classification of impersonal accounts. Specifically, we are focusing on nominal accounts. Remember, this is with Dr. Geoffrey Mbova of accountingnest.com. There we go. So in this classification of nominal accounts, you realize that under this umbrella, we have got two categories of ledger accounts. Number one, we've got the expense account, which is further classified into trading expense account and operating expense account. And number two, we have got the income account, which is also similarly classified as a trading income account and operating income account. So in today's discussion, we are focusing our argument on the income account perspective. There we go. The first thing we need to ask ourselves then, as we did in the case of expense account, is to ask ourselves, what about nominal account? How do we define a nominal account? And this is actually a reminder, because the same definition that we had in the case of expense account is the same that we have in the income account. So nominal account is a chronological record where transactions associated with expenses and the income are recorded. I would like you to note this, that nominal account affiliated transactions does not create a debtor-creditor relationship with the business. Not like in the case of personal accounts, where debtor-creditor relationship is automatic. In the case of nominal accounts, this does not exist. Now, nominal accounts are further classified into two. Expense account, as we discussed, and number two is income or revenue account. So, what about income account? How do we define this term? Now, income account is a chronological record for revenue generated by the business. Now, income account is used for recording actual cash inflow from business activities. So you need to note this, or rather, you need to remember this, that the term income and the earned income are two different items. You can check in our accountingnest.com website for further clarification of where the difference is. Now back to income account. Under this case or classification, we have a further division of this account into trade income account, that is A, and the B, we have got operating income account. So let's go to the case of trade income account. How do we define this term? Now, a trade income account is a chronological record for all cash inflows from revenue generated by the business from activities of trading nature. All right? So you need to note this. When we talk about trading activity, what do we mean? That is, the trading activities are the events or operations which are the core functions of the business, which forms the main objectives of the business. Now, the reason why the business actually exists. In fact, in accountancy, we refer to such activities as ordinary activities. So, for example, we have got the sale of inventory, which is a trading activity of the business. So far, so good. So let me go right away to part B, that is operating income account. What nature of accounts is this? I'll start by defining what it is, and therefore we are saying that operating income account is a chronological record of all cash inflows as a result of revenue generated from incidental activities. Mark that, which are not of trading nature. Alright, so you need to note the following before I give you examples of these kind of accounts, that when we talk of incidental activities, we actually refer to events or operations which are not core functions of the business. In other words, they are auxiliary or additional activities which also help the business generate other incomes apart from the core ones. So the following are some of the examples of these operating income accounts. For example, you have got bank deposit interest account, commission income account, rent income account, and discount received account. Right. So up to that far, you understand the difference between the two terms. So the following two illustrations are meant for further clarification of how different the two aspects of income are to the owner of the business. So in our illustration 1, on the 1st October 2022, Conye Company Limited sold in inventory for the $2,500 on credit to Clement Traders. Now this is an example of a trade income account. It's an example of a trade income account. So how do we record these transactions in the respective ledger accounts? Now when you look at the general ledger or book of Conye Company Limited and the nominal, that's the trading income, you will find that the following accounts will represent that transaction. That is, we'll have a sales account. A sales account is a good example of a trade income account, and the recording is done as follows. That is, on 1st October 2022, we have creditor Clement whom were sold goods worthy $32,500 on credit. Now when we go to the second illustration, now this addresses the issue of operating income kind of an account. So on the 1st October 2022, Conye Company Limited received cash from ABC Limited amounting to $10,000 as commission fee for agency services that Conye had provided to ABC Limited. So when you go to the general ledger or book of Conye Company Limited and a nominal, that is operating income, you will find this kind of an account, that is commission income account. Now this account, the recording is done on the credit side as shown below here. That is, on 1st October 2022, we see cash book recorded on the credit side of 10,000. Now this is a summary way of representing how recording of business transactions affecting trading and operating income nature of accounts is done in the books of accounts. This marks the end of this lesson. Thank you. Thank you. Remember, our materials and notes are available in our website accountingnest.com. Thank you.